There was a time when I believed trading was about being right. I thought if I could just find the right setup, the right indicator, the right entry, everything else would fall into place. I believed winning meant making money fast, bigger wins, faster growth, more confidence, less patience. And for a short while, the market rewarded that belief. I remember one particular streak early in my career. 3 weeks, almost no losing trades. My account doubled, not once, but twice. I started waking up already calculating how much I could make that day. I wasn't thinking about risk anymore. I was thinking about speed. How fast can I scale this? That's when the market becomes dangerous, not when you're losing, when you start feeling untouchable. Most retail traders don't blow up when they're wrong. They blow up right after they've been right. Because winning fast creates a lie in your head. The lie that you've figured it out. The lie that survival is guaranteed now. The lie that tomorrow will look like yesterday. And the market has a very specific way of punishing that lie. You don't feel it immediately. It comes quietly. A slightly larger position, a trade you normally wouldn't take, a stop that feels unnecessary because this one looks obvious. Then one day, one trade erases weeks of progress. Not because the setup was bad, but because your mindset had shifted from survival to domination. That's the moment most traders don't recognize. They think the problem is technical. They change strategies, indicators, time frames. They don't realize the real shift happened internally. Because trading is not about how fast you can win. It's about how long you can stay in the game. I didn't understand that early on. I thought longevity was something you earn later, after you make money. I thought survival was for conservative traders, scared traders, people who didn't believe in themselves. That belief cost me years. There was a point where I had to step away, not because I was broke, but because I was exhausted, mentally, emotionally, constantly swinging between confidence and self-doubt, between big wins and sudden drawdowns. I looked at my trading history and something became painfully clear. My biggest losses didn't come from bad analysis, they came from good periods. Every major setback was preceded by confidence. Every deep drawdown came after a phase of fast growth. That's when I started asking a different question. Not, how do I win more, but how do I stop dying? I started paying attention to traders who had been around longer than me. Not the loud ones on social media, the quiet ones, the ones who didn't post equity curves, the ones who were still trading after 10, 15, 20 years. And none of them talked about winning fast. They talked about staying alive. They talked about protecting capital as if it were oxygen. They talked about avoiding mistakes, not chasing gains. They talked about boredom as a sign of correctness. That was the first time I realized something uncomfortable. Most retail traders don't fail because they're bad at trading. They fail because they're impatient with time. They treat trading like a sprint in a game designed as a marathon. And the market doesn't reward speed. It rewards endurance.
There's a painful pattern I've seen repeat itself over and over again. A trader starts small. They struggle. They doubt themselves. Then one day, something clicks. The market finally gives them a run, a good run, and suddenly all the pain feels justified. This is where the real mistake begins. Because the moment you start believing you've earned the right to push harder, you step into the most dangerous phase of trading. I've been there. After a strong period, I would loosen rules I once respected. Risk per trade quietly increased. I stopped journaling as carefully. Losses felt temporary, almost irrelevant. Wins felt like confirmation of who I was becoming. I wasn't trading anymore. I was defending an identity. That's the mistake most retail traders never see. They think the mistake is over-leveraging or revenge trading or not cutting losses fast enough. Those are symptoms, not causes. The real mistake is this belief that winning fast proves competence. In reality, winning fast proves nothing about sustainability. The market is perfectly capable of making you money for the wrong reasons. Randomness can reward bad behavior for long enough to convince you it's skill. And when that happens, Discipline becomes optional, risk becomes flexible, rules become suggestions. That's when pain enters the picture. Not immediately, the market is patient. It waits until your exposure is high enough, your confidence deep enough, and your margin for error thin enough. Then it reminds you who controls the game. The loss that follows doesn't just hurt financially, it attacks your trust in yourself. You start questioning everything. You feel betrayed by the same strategy that made you confident weeks earlier. You oscillate between doubling down and freezing completely. That emotional whiplash is where many traders disappear. They don't quit because they can't trade. They quit because they can't emotionally survive the cycle of fast wins and sudden damage. That's the pain no one prepares you for. And I didn't understand it until I experienced the same pattern too many times to ignore. The revelation didn't come from a book or a mentor, it came from exhaustion. I realized I was spending all my energy trying to grow my account and none trying to protect my ability to keep trading. I was obsessed with returns, not resilience, with upside, not survival. That's when I stopped asking how much I could make this month. I started asking how much damage I could tolerate and still trade clearly. That single shift changed everything. I began treating capital not as ammunition, but as life support, something you don't gamble with, something you preserve so you can keep breathing in the market. I stopped chasing growth and started designing survival. Lower risk, fewer trades, longer evaluation periods, rules that felt almost boring. And something unexpected happened. My equity curve flattened, not in profits, in emotions. Losses stopped shaking me, wins stopped exciting me, and clarity returned. That's when I understood something most retail traders never do. The goal of trading is not to make money fast. The goal is to stay psychologically intact long enough for skill to compound. Time is the real edge in this business, not intelligence, not indicators, not speed. The market doesn't care how smart you are. It cares how long you can remain consistent without breaking yourself. And consistency only emerges when survival becomes more important than winning.
What most people never realize is that the market doesn't kill traders with bad ideas. It kills them with volatility they weren't built to survive. Once I started thinking in terms of survival, I began seeing the market differently. I stopped looking at charts as opportunities to win and started seeing them as environments I had to endure. And that's when a deeper truth revealed itself. Markets are not designed to reward correctness. They are designed to test resilience. Price doesn't move to confirm your bias. It moves to explore liquidity. It expands to find participants willing to take risk and contracts to punish those who overextended themselves. This is where smart money thinking differs fundamentally from retail thinking. Retail traders ask, is this trade right? Smart money asks, what happens if I'm wrong and can I stay in the game afterward? That difference changes everything. I remember studying old hedge fund interviews, reading risk reports instead of strategy guides. What struck me was how little they talked about entries and how much they talked about exposure. They didn't care about being right on every trade. They cared about not being wrong too big. Survival is a math problem long before it becomes a mindset. If you risk too much, even a good strategy will fail. If you risk little enough, even an imperfect strategy can survive long enough to evolve. Most retail traders reverse that logic. They search for perfection first, then ignore risk. Smart money accepts imperfection, then controls risk. I started reviewing my own data with that lens. When I stripped away the noise, a pattern became obvious. My best months weren't the ones with the highest win rate. They were the ones with the lowest emotional volatility. The months where nothing dramatic happened. No big wins, no big losses, just consistency. That's when compounding actually begins. Not financial compounding, psychological compounding. the ability to show up tomorrow without fear, the ability to execute the same plan after a loss, the ability to trust your rules even when the market feels chaotic. These are not technical questions, they are survival questions, and they are the same questions professional money asks every single day. The irony is this: once you stop trying to win fast, you often start winning more consistently, not because you became smarter, but because you stopped sabotaging yourself. Long-term thinking doesn't make trading easier, it makes it survivable, and survivability is what allows edge to actually work.
At some point, insight means nothing if it doesn't change behavior. Understanding survival is one thing. Building your trading around it is another. What finally worked for me wasn't a new strategy. It was a set of quiet decisions that felt almost insignificant at the time, but changed everything over the long run. I stopped asking how much I could make on a trade. I started asking how much I could lose and still think clearly tomorrow. That question reshaped my entire process. I reduced risk to a level where losses no longer altered my mood. Not because I didn't care, but because I refused to let a single trade have power over my psychology. I sized positions so that a losing streak would be inconvenient, not destructive. I also slowed everything down. I gave myself longer evaluation windows, weeks instead of days, months instead of weeks. I stopped judging performance based on short-term results and started judging it based on rule adherence. Did I follow my plan? Did I respect my limits? Did I protect capital when conditions were unclear? Those became my real metrics. I also learned to step away when the market wasn't aligned with my edge. Early on, I felt guilty not trading, as if inactivity meant weakness. Over time, I realized patience was one of the most aggressive positions you can take. Doing nothing is often the highest form of survival. And finally, I accepted something that most retail traders resist deeply. There will be periods where growth is slow. There will be months that feel pointless. There will be long stretches where nothing exciting happens. That's not failure. That's stability being built. Trading doesn't reward urgency. It rewards those who can remain calm when nothing is happening and disciplined when everything is moving. If you take one thing from this, let it be this: you don't need to win fast. You need to stay alive long enough for your edge to matter. Most traders never reach their potential because they burn themselves out trying to prove something to the market. They confuse speed with progress. They mistake adrenaline for confidence. But the traders who last, the ones who quietly compound over years, are not the ones who chased every opportunity. They are the ones who respected time. They understood that the market will be here tomorrow, next year, and 10 years from now. The only real question is whether you will. So if you're early in your journey, or even years into it, and you feel behind, understand this: you're not behind because you're slow. You're behind because you've been trying to move too fast. Slow down, protect yourself, build something that can survive. Because in trading, survival is not a consolation prize. It is the prerequisite for everything else. Master yourself, and only then master the markets.